Yo, what's good? It's your bro Lo, and I'm bringing you guys another saucy trading video. In this video, I'm gonna go over the trades that I took last week, mainly Thursday, and go over how I gather context and how I get a daily bias. All right, um, I hope you guys get enough sauce in this video, so go and smash that like button before we get started. Also, I'm not a financial advisor. Whatever I say or do does not mean you do it. All right, it's just not financial advice. All right, so yeah, so let's get right into the video. All right, so one thing that I do want to if you guys haven't learned this yet, this is ICT's Power 3. All right, so if you change your candles to the bars like this, right? You have your open. Okay, let's say your open's on the left, the open of the candle is on the left, and then the close of the candle is on the right. All right, so let me zoom in a little bit. So if you would look at this down candle right here, the candle opened here, right, had a swing up higher and then moved down, and then it closed right here. And each candle always has a open, a low, a high close, or an open, high, low close, most likely. All right, so with that being said, right, if we think of ICT's Power 3, right, his Power 3 is exactly that. All right, so you have your open, which would be here. Let's say we're bearish for the day. All right, your open would be here. You'll have like a Judas swing that goes up. I don't know why I just did that. Whoa. All right, you have a Judas swing that goes up first, so this would be the open of the candle. So let me move this over a little bit more. All right, so there we go. All right, so that would be your open. You will have a Judas swing up like so, and then you'll have that displacement lower, and then the candle will most likely close somewhere around here. All right, so this is ICT's Power 3. This is what I use to kind of get like a daily bias, and like to frame my trades as well. Even though I don't put it on my chart much, this is what's in my mind, right, when I'm thinking of where price can potentially gravitate towards or deliver to, right? So this is your open. Most likely this would be the Judas swing. Let's say if we're bearish for the day, this would be the Judas swing right here. And the Judas swing is basically the manipulation, price going in the opposite direction of where it wants to deliver to. All right, so if there's a sell side liquidity pool down here somewhere, right, and let's say there's like buy stops somewhere right here, maybe this is Asian or something like that, right, and then you have these lows down here. You have lows down here, right? Let's say there's lows down here. A lot of times you'll have the open of the candle come and run that buy side liquidity pool, right, and then create the Judas swing, go below the open, daily open, which this could be like Asian range or something like that, right, alongside with this, and then it delivers down to the sell side liquidity pool, and then most likely it'll close somewhere around here, right? So that's how I mainly frame my trades and get a daily bias. So with that little context right there of ICT's Power 3, with that being said, right, let's go into the chart, all right, and go over this GU trade that I took. All right, so let's go to the daily. Normally when I'm getting my daily bias, when I'm a day trader, right, day trader, scalper, sometimes I'll hold swings, right, but mainly day trader, scalper. Whenever I want to get a day trade, I want to buy above daily open price. I want to sell above daily open price if I'm bearish, and I want to buy above below daily open price or at if I'm bullish, right? So with that being said, right, this is the candle right here. Let's pretend like this is not here. All right, here, let's take that out real quick. Let's pretend that candle's not here. All right, when I'm looking at this right here, where we're at in price, we know that we're at a discount All right, we ran out sell side liquidity. Does that mean we're bullish? No, not necessarily. But if I'm looking at the daily, what are we most likely gonna push up into, right? Now, the first thing that I see is, yes, we could print bearish, but I see this fair value gap right here. All right, so it's at the high of these two daily candles, right? The open of the fair value gap, the discount of it, right? And then you have the premium of that fair value gap here. So going on to Thursday, I was expecting price to potentially open, create the Judas swing down, and then push up into this fair value gap and possibly close bullish, especially since we're at a discount, right? So we need some type form of pullback to get back to a premium of this price range, right? So with that being said, that's in my mind now. Now we have some I know exactly what I want to do, right? I'm not looking to sell price, right? If it's not offering me a buy, then I'm not gonna take it. Sometimes I'm wrong, and majority of the time I'm right? So this is what I'm expecting. Let's go down to the we're gonna go back into the price section, right? All right, so that's what we're looking at for price to push up into this fair value gap. Okay, so let's go to the 4 hour. All right, so this is our fair value gap right here. Okay, let's go to the hourly. All right, so here we go. All right, this is June 15th, 16th, 17th. All right, so 15th was Thursday. Friday. Oh no, wait. 17th, no, Thursday. Okay, no. The 16th was Thursday. All right, so we're gonna go into this price section right inside of here, which is Thursday. Let me get the dividers real quick. All right, so the start of Thursday was here and then finished right here. All right, so this is Thursday's price section. All right, let's go to the hourly. Okay, so now right here you can see that there's two consecutive down candles right here. We can go off the open or we can go off of the wick. I'm mainly gonna go off the open right now, right here, just because how far this wick is from the body. So I'm gonna look at the open of that order block. All right, so boom, that's our order block, right? Daily open is at 12 o'clock 12 o'clock New York time. All right, but for me it's 6 o'clock New York 6 o'clock because I live in France, right? 6 a.m. So let's plan out the daily open, which is right here, true day open. This is true day. All right, true day is right after Asian session is finished. All right, so for me, like I said, that's 6 o'clock. So right here is true day open. That's the true daily open right there. I'm gonna go ahead and plant that on my chart. All right, so there we go. That's our daily open, right? So what do we expect? What do we expect right now? We expect price to, after this daily open, create a Judas swing downwards and continue higher, right? And push up into this daily fair value gap like I was talking about, right? So we came into that order block here, also this down candle, and around a London session we started pushing up. Let's go to the 15-minute time frame. Around London session we started pushing up. Here's a down candle right here, came into this down candle. This down candle got supported by here. Also this down candle got supported right here, and this down candle got supported right here until we pushed up above daily open price. Now when I'm looking at this, right, I had actually took a position right here off of this down candle, mainly because we pushed up, we created that Judas swing down, and we pushed up above daily open price, right? So whenever you're drawing higher, down candles should support price until it reaches up into its draw on liquidity, which was that daily fair value gap, right? So I was looking for this daily down, this 5-minute down candle to support price. I took an entry here and right here, right? So this is my entry. I just took a basic entry here with my stops right below the swing low of there, and my target was these highs up here, right? Well, I was gonna, my last target was gonna be here, right? But I'm taking partials like around this high, and then this is my final target. All right, so I had that entry here, and then here I looked at the news and it was GBP interest rates, so I saw that very late, right? So I put my stops to break even. I moved it a little bit higher just to avoid some slippage, and then let it do what it was gonna do. If it was gonna shoot up or shoot down, whatever it was gonna do, right? All right, so what happened was it got real manipulative. It took out every single trader that was in London here. All right, every single trader that was in London here. Whenever you want to buy price and you're looking for it to draw higher, expect sell side liquidity runs. After those sell side liquidity runs, that's usually where the move is gonna really happen. All right, so once price took out London's low here, this is London's low, okay? This is 9 o'clock for me, but this would be like this will be 3 o'clock a.m. New York time. All right, this low right here ran out every trader that was inside of London. Also, it activated sell stops. When those GBP reports had came out, everybody's like, okay, we need to let's sell, because it went under this low. Retail traders are like sell stops because GBP reports came out. They're probably looking at that daily candle like, yeah, we're gonna most likely come lower, right? When that's not the case, right? They manipulated London's low, purged and revert, activated sell stops, and had a shift in delivery higher, displacement higher. So my first entry that I wanted to take, okay? So I'm gonna go over that. Even though I didn't get this entry, I'm gonna go over what I wanted to take. So that way, if you see this, you know exactly where to get in at. All right. So here we ran out London's low, and this is what happened. We took out this low here, okay? You see that right there? You could say that's like a stop punt, right? Stop punt, along with it running out sell side liquidity, okay? After that, we had a shift in delivery right at this high here, this high right here, okay? That's our shift in delivery. Once price broke above there, that's our shift in delivery. After price breaks above there, we're looking for, where's the order block? All right, where's our order block? Our order block is not this down candle right here. It's here. It's right there. Okay, right there. That's our order block. This whole thing would be considered an order block because it's 4 consecutive down candles coming down. 1, 2, 3, 4. All right. You mainly want to look at the breaker whenever you have a run like that, consecutive down candles like that. You want to look at the breaker of the down candle. Also, where's the fair value gap? Did we have a quick displacement? Yes, we did. Where's the fair value gap? Right here. There's also one right here. Price can reach into there, so you will put your stop right under this low, or you could put it right below that fair value gap, but sometimes it could dig into there and then close right above here and continue up. All right, so you want to leave room for your stop. But this is where my first entry was gonna be, right? This is where I wanted it to be. I wanted it to be there, and we're gonna seek higher prices, but it never came into that entry. And sometimes, you know, you're not gonna catch every move, right? Okay, so what I did was I adapted, right? I kept building context. We ran out London's low, right? So remember that daily open price, daily open was this red line. Judas swing down, remember? We came up above there, but we also came down again and broke below here. How do I know this is not a break of structure? I really don't. I really don't. But I'm not thinking like this is a break in structure and this order block is going to hold. No, because I have a bullish bias of that daily candle reaching up into that fair value gap. So once this got ran out, London's low got ran out, and we had this quick displacement, it's basically proving me that price is most likely going to take out this high, and we're going to push up into that daily fair value gap, because we ran out London's low for a reason during interest rate. So we're trading away from the manipulation, right? So when this happened right here, we had that shift in delivery, looking for that trade right there. We had a quick move up. All right, so now people who had their sell stops are trapped now. Usually you would put your stop up here, right? That's where I'm thinking they would have their stop, somewhere around this region after sell stops got taken out. And now they're in drawdown. All right, you got something that got stopped out and you got something that's in drawdown, right? Still holding and hoping that price will come back. All right, so once price had another displacement higher and we came above this high right here and above what? That daily open price, all right, which is this red line. I'm not expecting price to come all the way back down here into this fair value gap, or even here. Why? Because if traders are trapped, right, why would they want to push price all the way back down here to give them another to allow them to get out of their position that's in drawdown, giving them another opportunity to get out? Why would they do that, right? I didn't expect them to come below this 2 consecutive down candles. Also, when price is bullish, what should support price? Down candles, right? So here's our down candles right here, 2 consecutive down candles there. All right, not expecting it to come all the way down to this fair value gap, not expecting it to come down here. And this is why you got to know how to apply the story of what's going on, right? Why is price doing and why is it doing that, right? All right, so my buy position was here on GU. My entry was here, stops right below, just like a little break and retest. Little break and retest. And then my targets was on 1 and 2 first, and then I left a runner above this high right there, right? And I just took my profit just like that. All right, that's it, 1 to 2. I didn't expect it to expand that far like it did right here for Thursday. I didn't expect that, but I did expect it to close bullish. Once they came into this fair value gap, low hanger fruit, I'm out. That's it. You know what I mean? That's it. But this is how you apply that open, high, low, close. So now it will look something like this. This is how the daily candle should look. All right, so it should look something like this. So open. Okay, let's take out this horizontal array. All right, so open right here. This is our low. So we got our Judas swing lower, right? Judas swing lower. Then we made our high, which was up here. And then our close was somewhere. Let me see where that close was. It was somewhere right here. All right. So that's the daily candle. Daily candle right there. All right. Pushing up into that fair value gap, which we were expecting right here in this candle. So it came lower, got a little manipulative because of the GPP interest rates, and then it pushed up into the fair value gap and also came a little bit higher into this fair value gap, right? But all I wanted was this one right here. I didn't mind, you know, I wasn't looking for it to come all the way up here, right? But that's how I apply daily bias. Let's go over AU, and this is another trade that I wanted to go over, right? All right, so with AU, Same thing. All right, let's go. Let's take this out right here. Let's go to the daily. Right, we're gonna go over Thursday. All right, so where's AU exactly? All right, AU came into some type of discount around here. The draw could have been this low here, but since we ran out these relative equal lows, it's probably playing off of something right here. And since we had this engulfing like so right here, I was thinking, okay, maybe the next daily candle could print higher, right? And maybe come into this fair value gap right inside of here. All right, that's what I'm thinking. All right, so let's go to the 4 hour. Let's go to the 1 hour. So in the 1 hour time frame, you can see right here that price opened around 6 o'clock here. All right, so this is our true day open. This is 12 o'clock New York New York time, right? 12 p.m. or a.m. my fault. All right, daily open price there. All right, boom. All right, let's go down to the 30-minute time frame. Okay, so in that daily open price, we can see that there's buy side liquidity resting right here. Okay, here's our buy side liquidity pool. All right, boom. There's our buy side liquidity pool. Even though we kind of purged it a little bit, this is still buy side liquidity to me. All right, still relative equal highs to me. All right, here's that fair value gap on the daily right there. Here's our daily open price. So now that we have that daily open price, where can we get in at? Okay, we're looking for order blocks, bullish order blocks, and we're looking for sell side liquidity pools. All right, we have a sell side liquidity pool right here. All right, but there's nothing under it that's like, you know, where it's like, it's nothing under, no confluence under here that's giving me a reason to like want to be a buyer. All right, I see this down candle right here. Once we come into this down candle here, then I could look to start framing the trade. Okay, if there was internal liquidity around this order block or a fair value gap, then I will look for that, right? Okay, so daily, let's go to, where's it at? Okay, 1 hour order block, 15-minute. All right, so here, right, we have this old low that came in around London right here. Okay, I wasn't expecting this low to hold on London based off of the delivery and how price moved after it came into that low. So let me show you guys how that looks. Okay, so do you see how it's not enough oomph? Like, it's not enough displacement, it's not enough movement. Even though you have this last fair value gap, right? People like, oh, I left a fair value gap. That's valid. No, there's nothing showing me that price is moving, right? And this is gonna be the low. That smart money is in this move, right? So one thing that I wanted to see during New York is for London's low to be ran here. All right, so here's London's low right here. All right, during New York open, we have this low right here. After price ran out London's low here and also ran out this short-term low, we have this high that got broken here. All right, right there. Look at the displacement after it ran this low. Look at the move, right? So my entry, let's go to it real quick. My entry, actually, I don't remember where my entry was. Hold on, let me go to it. Was this it? Yeah, this was it. Okay. Okay, so it's on the fair value gap that's a little bit higher. Okay, it's a little bit higher. All right. So my entry was off of this fair value gap right here. And the reason why I have my entry here instead of like all the way down here is because you have this fair value gap here and you have this consecutive down candles that we're pushing down. I'm looking at the breaker, quick fair value gap. I'm looking for the low hanging fruit of a entry. That way I'm in the trade. I don't miss the trade. Also, I leave my stops here to give it room just in case it wants to push down into a discount, right? And then my targets was above daily open price in the buy side liquidity pool that's resting right there for like 59 pips, right? And as you can see, price decided to manipulate again and run out the low again. All right, and this is gonna happen during weeks to where, like, you know, you got FOMC, then you have GBP interest rates, you also have Japanese yen interest rates. You know, you got a lot of news that brings a lot of volatility in the market, and you'll get a lot of manipulation sometimes. And before those news events, you'll have weird delivery and choppy price action, you know. So I wasn't surprised that this happened right here. You know, you see your model, you follow your rules, and then you enter, and then that's it. You can't control that it's gonna do something like this, right? So when this happened, I got profit to play with. So when this happened right here, right, and took out London's low, my context, even though it got taken out right here, I still wanted to see us get above daily open price and push up into this buy side liquidity pool that is Asian's high as well. So this is Asian's high as well, right? So it's a lot of confluence, a lot of high probability that we're still gonna push up into that high. Sometimes we don't, but it's higher probability that we will, right? So we ran out New York's low again, and we ran out London's low again, relative equal lows. After we purged that right here, I was still interested in taking a position, right? So right here, we ran out London's low. Here's that down candle right here. This is our shift in delivery right here. All right, so if we go down to the 1 minute, all right, so here we go. We took out this high, right? Some people would be like, where's the shift in delivery? It could be here, it could be here. I'm looking at what ran out sell side liquidity. What was the leg that started it? Sell side liquidity. Where's the fractal high? It would be here. Once it ran that out, I'm looking at the fair value gap to get in, right? And I believe I got in a little bit higher. So you see how you have this 15-minute down candle. I was trying to get in at the premium of that right there. I didn't really expect it to come into a discount, right? So I got in somewhere here. Yeah, I got in like right here off of this fair value gap there. Then my stops below, it's like a 23 pips, right? And then target was that daily open price and Asian's high, which was right there. All right, Asian's high, which would be like a 1 to 3, right? Make back what I lost plus more. All right. Oh, whoa, what happened? All right, my fault, guys. So let's go back to that price section real quick. So you can see after we came back into the Dylan range, right, from this low to this high, came into the fair value gap, we played into this fair value gap, the lowest, the discount of this whole move up. You also have the breaker. Look, you have these consecutive down candles right here. Here's the breaker of that right there. You can see how it played off of that. Bodies supported it right there, and then we had price deliver higher and took out Asians high. And what was our target for the day when we were looking at the daily, right? We're looking at that fair value gap on the daily time frame. So we had that open, low, high, and then the close was right here. So if we mark that out on the chart, I'll show you guys real quick before we end the video. Okay, so there's our open, low, high, and then our close was 0 0 right here. Close was there. All right, so this is our open, Judah swing into a discount array, took out sell side liquidity and displacement higher, and this is our candle right there. So I hope you guys got a lot of nuggets in this video. Hope this helps with your daily bias and, you know, your model or whatever. And go ahead and like the video if you would like. Actually, don't like the video if you would like the video. Share this video if you would like, and I'll see you guys in the next one. Peace. I'm out.